right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for December 8th, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 505. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today's expert panel is Norman Hallett, Wally Olopade, and Sonny Harris. And Jim, the option professor, is back to moderate. So I'm going to turn it over to him.
Okay, thanks, David, and thanks everybody for being here. We had a little bit of a pause to refresh today in the markets because we do have a Wednesday Fed meeting, and people are concerned that if we get a cut of 0.25% and the talk is hawkish, people are concerned there'll be another filming of the movie The Birds, where the hawks are pretty powerful. But if that's not the way it works out, maybe this is just a temporary little dip, and we'll get going pretty soon. Okay, let's find out what our panelists think is going to be happening here. We're going to start out with Sonny Harris, who's going to throw those Sunny bands up. She's got a technical tool she's created called Sunny bands, for those of you who are not familiar. And she is going to help us understand where she thinks the markets might be going. So, Sonny, let's take a look at those bands and see if we're going to have that end of the year rally January effect, which only 99.9% of the people are expecting,
Only that many?
Yeah, it's a very light crowd there on the bullish side, yeah.
Yeah. Well, it's interesting. You see, we've got a high right here in the market. Then we've got a higher high with this peak. And now we've got a lower high. And to me, that could signify a turn in the market and a move down to my dynamic moving average, which is the purple and gold lines in the center of the bands.
Could we switch over to S&P? Because I think most people
sure.
Yeah. And the numbers might resonate more with the people too,
Come on, ES.
SPX, anything like that. ES, yeah. You want to do the future? No problem.
Well, that's the one I use, so
yeah.
I'm used to it.
Okay, so
similar. We got a high here. We've got a lower high here. And we've got a turn going on here that's not quite as high as this one. And it looks to me like it could be turning. And then it could drop to the DMA, which is the purple and gold lines in the middle of the sunny bands. So I'm a little.
So let's get a little fresh on the numbers. That green line up top that it's coming off of, what's that number? About 6,900 or 6,892?
68.92.
All right, and if we dip down to your gold and
then we'll be at 67.70.
I think that's a great number to hold if it's going to hold. If it doesn't hold, I think a little bit more of a timber sound, right?
Yeah, exactly. Yeah. If this doesn't hold, we're in trouble.
Yeah, that's right. I think the end of the year rally might leave the building as well. What about how far down the next one is? That's 6,700 about.
Bottom band is at 66.49.
66.49 is the bottom one. Yeah.
Right.
Yeah. And those are great. I think those are great numbers, I mean, as far as, support levels.
Yeah.
And yeah, maybe they'll just try to do, what are we on, the 7th? No, this is the 9th of the month. And maybe it'll be a deal. Yeah, maybe this will be the deal where this week they shake things up. Maybe in week 2 and 3 of the month, or at least week 2, and get people scared out a little bit. And then maybe the year-end rally actually commences from the 67.70 area at best. And then maybe it can go up and make the new highs, because there's these guys like Tom Lee on CNBC, they're talking about a 5% rally in December takes you to 71.50, and a 10% rally in December would take you to 7,400 and change. So they're still very optimistic. Yeah, I know they're very optimistic on it, but and they like I say, it wouldn't surprise me if it did that, but it's certainly not going to do it without getting above that green line of 68.92. That's for sure.
That's right. I'm skeptical. I'm thinking it could drop to this level and surprise everyone.
I'm going to ask Norman. Norman, you look at the bodies of the candles. Is that body of that red candle that we see right there? Is that of any significance to you, or is it just too small to make any significance? Or
interesting that you say that. I mean, look at the preponderance since I guess the November 26th or whatever, when the red candles started recently. You've got a bunch of red candles going down, and recently we've gotten more higher closes than I mean, you got a string of blue candles, and then you got a lot of nothing for the last 5 days. I mean, we used to, I don't know if you did this, Sonny, but we used to take the chart, I can't do it here, and flip it around.
Yeah.
And because it gives you a different perspective. I mean, I look at exactly the area that Sonny is looking at, and you certainly, the first thing that you see is we've tried to break out a few times, and we haven't. You
Yeah,
had the original high. Yeah,
Norman,
and
that's called the atom theory of markets.
the atom.
When you flip the chart like that.
Oh, really?
Yeah, it's a Wells Wilder thing.
Oh, really? I thought it was the Addams Family thing, which is very similar. But yes, but that I didn't know where we got that from. But I mean, you're seeing topping action if you look at it this way. But if you were to flip this around, you'd almost say to yourself, boy, this thing really looks like it's bottoming. It doesn't seem to want to break out. And so you'd have the same conclusion that the market is going down. Now, if you look at it another way and you take a more localized view, where you have your where you have your hour right now is the bottom of and Sonny usually corrects me on this formation because I may be wrong, but that head and shoulders type bottom more we're just I've never seen a market at this time of year that is so undefined as where we want to go right now. I think there's arguments in both areas, but I don't think anybody would talk about a screaming market. I think it's going to advance quietly or come down quietly, one way or the other.
We're going to be the ones screaming.
Yes, well, that goes with it, even after the markets are closed. But the idea is that with these small candles, there's nobody is really convinced about where we're heading from here on in, and I think it's it's a reflection of being pretty sure that we're coming down another 0.25% on Wednesday, and pretty sure that that although the economic data looks stronger, the jobs data looks weaker, and that seems to be balancing itself out in the action of these markets.
We could have a buy the rumor, sell the news event.
Right, but which piece? Which piece you want to say? You're talking about with Wednesday's announcement.
Yeah.
I think so too. But is Wednesday announcement a disappointment on what's expected? If it's, I mean, it's. I think we can all probably put some money on the fact that it's coming down 0.25%. But from there, who the heck knows? I'd be interested to hear what Wally has to say because he looks at these
I was wondering if I could get that name Wally in there, Norm, but you were on a little bit of a roll there.
Yeah, that's all right. Wally, please excuse me, Wally.
Wally. Let's hear. We've heard about the bodies of the candlesticks and the bands. Do you have a chart you want to put up there and show your methodology on how you think things are going to be going?
Yeah. Let me show my chart. It's very similar to what Sonny has, and I kind of agree with Sonny, to be quite honest. But yeah, and as far as candlesticks are concerned, there are definitely some things showing up. But let me show you my chart. Hopefully you guys can see this. This is a chart of the S&P 500.
Sure.
Starting off with the monthly time frame. And what happened last month, this red candle here is kind of like a top-in pattern, so to speak. And so when Sonny said, she's seeing things beginning to roll over, I totally agree with that, because then we come over here to the daily time frame, and now, from what I'm seeing here, again, this candle right here from Friday, that is usually a top-in pattern, and the fact that now today it followed with a drop, that's a telltale sign of a market that is trying to go down. Anybody who understands candlestick signals, they know that's called a hanging man. And so once that happens, and then we have follow through, which is what we got today, chances are now higher that things could start rolling over. And then I actually looked at, I like to look at the FANG stocks just to kind of see, because they do carry a lot of weight in the S&P 500. And so when I was looking at Apple, and especially when I went to a bigger time frame on the weekly time frame, that long wick at the top,
Yeah,
that's a major warning sign. I mean, we had the same
that's
thing back.
that's no good, huh?
That's not a good sign. It's similar to what we had here in July of 2023 when we had that up there. Same
Or
thing that we
April at the
had,
bottom, right? Or April at the bottom.
or April at the bottom, exactly. So,
Mhm.
so this when I saw this, I was like, whoa. So, and I didn't even know because most of the time I don't pay attention to the news. I just go by candlestick. But when I heard you guys say, "Oh, the Fed's about to say something this week," and it might be a catalyst, I'm like, I will not be surprised if after the Fed announcement comes out this week, it pulls the market lower because this is just major warning sign. There's smoke. I'm seeing smoke out there, and it's not just Apple. I go here to Microsoft, and you can see it's already been happening on Microsoft already. You go here to Amazon, and Amazon is already dropping as well. If we were to even go to the monthly time frame of this just shows major bearish signals. And so, if you were to ask me, you're going to usually ask this question, say, "Hey, what do you see the market going this week?" I would be more inclined to say I see the market dropping as opposed to the market rally this week. And then obviously after the announcement, we'll kind of like assess whatever damages or effects that the announcement has. But for now, just based on what I see here, I'm more inclined to say watch out below because there might be something dropping. That's how I see that.
Yeah. I agree.
Well,
so you're going counter the seasonal. I mean, a lot of people like they say, 99% always looking to be long.
That's a very good point that you make there because typically speaking, we're supposed to see in the market rally.
Yeah.
And I've been telling all my followers, hey, right into the end of the year, right into the end of the year. But when I saw this today, I was like, what's going on? And so that's like, that should not be apparent if we are seeing a market that is ready to go higher. So it could be just for a short-term period, like maybe just a week or two, maybe. But I would definitely say from what I'm seeing, there's some warning signs that should not have been apparent if the market is trying to go higher. So, and even if it drops, it could be just, a short 1 day, 2 day drop and then recovers later. But I would 100% agree with Sunny. This seems like a rollover is about to take place. So how long that will last, time will tell.
What about the 10-year note, which I've been trying to explain to people is not going down? Can you put up
for that one?
well, on mine, it's a $ TNX. That gives you the actual yield. TNX. There you go. See, does that come up as? Yeah. But I
No,
don't
it
know.
doesn't come up on mine. If anybody has it, you can switch.
Yeah. Anybody, do you know how to get it up to?
Is it still at 4.1 today?
No, it's at 4 almost 2.
No.
And that means
Norman, do you have a chart that you want to put up there just so we can see? Because I'm
not
not
of
sure.
that. Not of that.
what about on your futures? You can look at the futures contract, Norm.
Of the 10, I've never looked at it really on this.
Yeah.
But
what would be the ticker symbol for the futures? Do you know?
Do you have it?
I'll tell you right here. Hold on a second here. Just go there and go there.
If David has it, we can use David's.
Yeah, the 10-year the 10-year symbol looks like it would be ZNH26. ZNH26.
Wait, well, that's the dollar index. Yeah.
You wanted the 10-year
10-year government. Yeah, that's one. Yeah. That one. Yeah. All right. So anyway, well, that is where it is. And like I said, that's supposed to be going up if yields are dropping. And it does have that nice, looks like those kind of, what do you call that? Head and shoulder reverse there going. Yeah. Anyway, it's at 418. And if you look at a longer term graph on it, like a monthly or a weekly. Yeah, weekly
That's
or
5-year.
monthly. Yeah. So you can see, like I say, it's it looks like yields are supposed to drop and this is supposed to go up. There's no doubt about it. But for whatever reason, it seems to be hesitant to do that. And so, if this thing were to break under the blue line but the RSI looks like it's ready to go up. So anyway, that's I think one of the reasons people are a little concerned is that, they're dropping interest rates and the yield's not going down, which means between the deficits and Kevin Hassett taking over the steering wheel, there's a little bit of uncomfortableness going on. I think there might be something to that. Norm, do you think there's anything to something like that?
Yeah. I mean, I just think that we have balanced forces here, and I think it's the sticky inflation. The fact that we're really not seeing a drop, we're seeing, sideways action. Again, depending on labor versus productivity, the separation between rich and poor is just getting wider and wider. And of course, at some point when people can't spend, the profitability is going to break. And it's just kind of waiting for something waiting for the other shoe to drop here. It's going to be, we're expecting the new Fed to bring interest rates down even more rapidly, which is why I'm focusing more on the gold and the silver. And, again, I'm a day trader and it's commodities. So, the indexes are always attractive because of the beautiful volume in those contracts and how they seem to ride some of the moving averages nicely on a daily basis. But the action really for the last few weeks has been for the last few months has been in the metals, and that's where I've been spending my time. And the metals they continue to look strong.
I'm predicting gold to go to 5,000.
What's that, gold? Oh yeah. Well, I'm wondering how far silver can go. It almost hit 60 today or last week. So we're looking at numbers that we haven't seen before in the silver and the gold. But it's a little bit of a scary market because when you're dealing in gold on a basis of 4,500, 4,200, these kinds of numbers, the same percentage moves that you were having when it was at 2,000 has more than twice, 3 times the volatility that it had before. So all of a sudden, the micro contracts in gold, the 10 ounces, is becoming the thing to work with for accounts below, say, $10,000 or $20,000 for the smaller accounts.
How's the volume in those? Pretty good.
Yeah, they're getting better. I mean, gold, even now, the gold and the micro volumes are not anywhere near what happens with the equities, but still, I think you're not getting run with the stops. The stops are reasonably hit, which is what I'm always concerned with when I'm looking at volume.
Right.
What about that silver chart you just set up, David? Because it looked like there's a huge divergence on the RSI. Yeah, there you go. And then we're up in the Himalayas here, aren't we?
Yeah. I mean, look at that. My thinking is, I think people can get overbought and oversold wrong with the RSI.
Oh, no doubt.
If it spends some time up here, it may just be indicative of a very small market that's going to continue higher. I mean, we've been above that 70% level now for, it looks like, a week. And yet all the market did was show more strength. And it doesn't look like it's done to me. So we'll know a lot more after Wednesday.
It's not that big of a market. And in this day and age, you throw money at something, that doesn't have the biggest, liquidity, it can go wherever it wants to go.
No question. I mean, you've got to have your stops. And I really I really press people to use limits in this market, because in the same way that a volatile market can hurt you without stops, limit, you can really capture some of the open trade equity, because I'm dealing with mostly prop traders now.
Right.
And when you give away open trade equity as a prop trader, it works against you in most of the rules, as they're wanting you to control your risk. So when you can capture a nice chunk and pad your distance from the red line, the blowout line in prop trading, before you really start to expand your profit and get some kind of a consistent income from it. Most people are playing in I can't quite get qualified, I can't quite get enough to ask for money in my account. These kinds of levels, you need to respect the kind of volatility that gold is seeing with the thinner markets, but utilize it in your favor by capturing moves with limit orders. I don't think people use enough limit orders along with stops. So that would be my major.
And I'll bet what's working good for you, Norm, is that short-term moving average, because I'm just looking at silver here in the last 5 days, or actually in the last month, And there have been a number of days where it was extremely trending and it gave you tremendous volatility in the direction of the trend.
Yeah, it has. I mean, it's been very, very orderly in that respect. I mean, I use primarily the 8-bar exponential moving, the 8-candle exponential moving average. I think they called it the golden mean. The late great Stephen used to use that a lot also. He's the one that really impressed me on it. And you know, I use that along with the 34 as a backup, as kind of a guardrail. And so, but it's been acting very well against the 8, and you know, and that happens when you get a nice smooth market.
Yeah, you don't get that environment all the time. That's why it's very, very important to be consistent, because, you know, if you churn yourself up and don't use your proper discipline, you're not around for, shall we say, a little bit of the gravy train, you know?
Well, that's it. I mean, most traders have a pretty good sense of analysis, enough to be right most of the time, but they just don't have the mental and emotional control to apply what they know, because of fear of losing. You know, most traders who are unsuccessful and therefore develop the losing habit or a struggling habit. They expect to struggle, they expect to lose, and therefore when they come to the table, they come with a certain degree of fear, as opposed to trying to develop. That's why we opened a trading room about 4 months back. I did it because I wanted people to learn what winning looked like, and what a winning habit could look like if you enter the room and start to take some of those trades that you see a winner winning, and those habits can develop. So you know, listen, trading is mental. Any of us will tell you that. I mean, yes, you have to have the analysis, but there's a lot of different ways to look at the market and be right. Different time frames, different markets, different personalities that you use. I mean, but in order to control yourself, that takes, you know, personal commitment, and that's where people go wrong. You know.
Can I add something to gold and silver too as well? Just looking at the charts.
Do you have any stocks, Wally, that you're looking at in the gold and silver area that you think have some interest, or is there anything?
Not necessarily any individual stocks, personally,
okay.
But kind of going with what Norman was saying. Silver, gold has done really, really well over the last, you know, few weeks to a month. Here's what I would say as far as a technical analysis, candlestick analysis point of view. What was it on Friday? We saw that, you know, long wick at the top again, which is usually a top-in pattern that tells us, hey, be aware. And what I always tell people to do is place a resistance level at the top of that line. And if we break above that and close above that, then okay, we have a breakout. But chances are, I'm looking at what's happened within the last 1, 2, 3, 4, 5, 6 candles.
Yeah.
And I noticed that.
Do you want to put up the gold chart?
And sure. Actually,
and then you can have your candles up there, because
I can put up my chart. Yeah, no
because
problem.
like I say, on the gold, it kind of peaked out at 4,400, went down to 3,900. I had about a 60% throwback to 4,250, and now it's kind of been on the defensive because it seems like it's having trouble with that 60% throwback. Yeah.
So this level right here, if you guys can see my chart on December 1st, the high right there, we could not close above that level. And so to me, the fact that we attempted to come up there, we couldn't get it, and then we even surpassed it on Friday and came back down again, is just telling me, okay, for whatever reason, this is an issue. This area is an issue right now. So if this overall market is trying to turn down, gold might actually tip over just a little bit. And again, not long term, but at least in the short term, there are signs that things are not ready to go. So here's what I would say for anybody who's really interested in this: is like I see a range where this is as far as as low as it went before they started pushing it back up. Let me go back here and put this line on here. So this is as low as it went. Yeah, exactly. So this is as low as it went, and so that's where my support would be. And I say, okay, you know what? That's the range. My resistance would be at the top right here, and we'll do something like this. And so the idea here would be that, you know, somewhere in between here and there. And even if in situations like this, especially when we know that something is about to come up, that could be a catalyst, is to watch for those two levels. Whichever level it breaks, whether it breaks the resistance or support, that's more than likely where that stock is going to go. And so in gold, as much as I would love for gold to start heading high again, I would need to see it break this resistance level for it to continue doing what it was doing before. If not, then I'll say, okay, you know what? It's had a really good run. Maybe it could be taking a break. Seasonality wise, January is when the gold tends to do really, really well. Okay, so it usually takes a break in December and then picks back up in January. So going with that thought process too as well, I say, okay, you know what? I'm not expecting gold or silver to do much between now and the end of this year. Um, but by January, then yes. And so this is silver right here, and it's almost the same thing. This was that resistance that happened on December 1st, and we cannot close we haven't been able to close above this the whole month of December yet. And so
Well, let me
again,
ask you something, Wally, because you said
sure,
things in your initial analysis. You said that, and there's a question after this.
sure,
When the market, you know, you don't want to see the market go through that high, but you don't want to see it close above that high. And this is a confusion for a lot of traders. A
okay,
lot of them would have bought that breakout 2 days ago and got hurt because of it. Of course, and I think anybody that's traded a long time would rather take a smaller position and rely on a close rather than an intraday move, looking at it with a setup like this.
correct.
How do you said two things in the same sentence. You said you wanted to see it break through, but you also wanted to see it close. How does somebody trade that, in your opinion? Would they have waited for the close on this day, or
Correct.
would they have gotten out and just reestablished a position after being stopped out?
Yeah, so I always tell people wait for the close. And so in a situation like this, let's say tomorrow it closes above there, then by Wednesday morning, you now know what direction the market is going to go in. So you're going to give that one day up just to kind of see where it goes and where it closes more than anything else, because that close to me is super, super important. Once we close above it, then there's a chance that the next 2, 3, 4 days or the rest of the week is going to go
You
higher.
get follow through.
Does that make sense? Yeah, that follow through.
Yeah,
And
but
so what I don't want happening is exactly what happened on Friday, where it seemed like it was going to go, and then by the end of the day, gave it back. And that to me is a telltale sign. It's like, okay, there's something wrong. There's something wrong. Like, why did all the sellers kick in when it was doing such a great job earlier in the day? So,
yeah, no,
but
listen,
yeah,
I as the temptation say, a second out of motion, because you know all the candlestick books I've ever written, especially the older ones, talk about how the farmers, the Japanese farmers, all they cared about was the open and the close. They almost didn't, they almost ignored
exactly.
the wicks on most cases, you know.
On most cases, yeah. And so to me, the wicks just kind of lets me know, okay, this is as high as they went. There was a reason why they thought it was going to go higher. And they reached that level, and then for some reason they decided, well, we're not. And that's where I look at all the wicks combined as okay, the first one started on December 1st, and we still haven't been able to close above that level. There's something is wrong. Same thing down here. If this is the low on silver right here, that's okay. You got to show me that you're willing to surpass that support level for me to believe that the continuation is going to take place. Until then, it's like, okay, I usually just tell people, let's go find something else. Let's wait. It's going to break out regardless. It cannot stay in this range forever. It's going to break out regardless. And so when it does, and it could be based on the calendar. So again, Wednesday would be a very, very important day. Thursday morning, we'll know for sure whether we close above those resistance level or close below those support levels. And then at that point, we know which direction to go in, whether we should be shorting or we should be going long on these stocks.
There you go.
But yeah,
I think we put the option professor to
I know,
sleep.
right?
Oh, my fans, they just won't let me alone anymore.
Well, those small bodies, Wally, is something that always impressed me. I mean, the fact that we have literally indecision on 4 out of these 6 days.
Exactly.
With not only do we have ranges established, but you know, and when I see that, it really tells me that there's power fighting both ways, and wherever this thing breaks, we usually take.
Not only that, but I always look at it too as like, okay, there's a decision that needs to be made, and they're waiting to see what that decision is going to be.
Yeah,
Does that make sense?
and the longer this horizontal accumulation happens, we used to take that compass and turn it north or south, and you can get an idea of where the movement is going to be after the breakout. So we'll
Exactly.
probably
And I always find it very interesting that if within a week or two before some major announcement happens, we start seeing price action do something like this, then more than likely there's a very, very, very high chance that yes, they are waiting until that announcement is made. And so usually I would say, okay, what announcement is coming out? Because I'm seeing like it's been a week, like all the whole month of December, and it's like it's stuck. It's like as if they say, hey, let's wait and see what's going on, and let's wait for this announcement, and then we'll make our decision then. In the meantime, the intraday trading goes up, goes down, but it's like we're not going to go too far high, we're not going to go too far low. Let's just kind of like keep it steady until that announcement comes out. And so before you guys even mention that, the Feds are speaking this week, to me, I was like, okay, something is happening. That somebody has to make a decision. There must be some kind of news that everybody's waiting on, and that's why it's just going sideways. And you'll see, it's almost like if a FOMC meeting comes out at 2 o'clock or 2:30 in the afternoon Eastern time, and if you look at the 1 minute time frame or the 5 minute time frame, how it just goes sideways leading up until 2:30 before the announcement. It's the same thing that we've seen here. So yeah, I'll be waiting to see. Go ahead.
Yeah, I was just going to say we're getting old reports. I mean, right now, that's why this month has really gotten nothing new, and it's amazing how the market has predicted. They've been using alternate report, kind of localized reports in order to come with a market opinion, which happened to be confirmed by these September adjustments that are coming out. So there's been no movement. There's been no surprises because these alternate reporting, not from the Fed, but by other means that they've been using to analyze the market, has been pretty accurate. And there's been no surprises, which I thought was pretty interesting.
Yeah, that's a good point you make. Really not too much surprises right now. So yeah, I think the market is in dire need of something to kind of spook it either way. So yeah, I'll be interested to see what happens. So like I usually have my Monday night webinars with my subscribers. And so a night like tonight, I'll tell them, I say, guys, don't worry about anything tomorrow. Wait till Wednesday when the announcement comes out. Okay. Because then the real trading is going to begin on Thursday morning after we know which direction the market is trying to go.
It's a pretty risky time when you think about it, because either A, the fact that they can't fill that gap is extremely bullish, or B, there are gaps to be filled underneath that would really shake up the longs quite a bit. So this is definitely an area of high concern if you are holding a position. There's no doubt about that, I don't think. Hey, Sonny, could you throw your Sunny bands up there and give us an analysis of the gold and silver using the Sunny bands? Because I think that would be an interesting take.
I could sure do that if I can find the little icon. Here it is.
Yeah, because these gold and silver, they're probably going to have significant moves one way or the other, because they've already had them, and it's either they've seen their day for a while or they haven't.
Well, let's get the symbol.
Reversion to the mean or keep the trend going, one or the other.
Yeah, I think it's going to come down a little bit more and then go flying on up.
Okay. So you're not looking. This is what, SLV. So are you thinking it could go down to the 50 level and fill those gaps, or do you think
it could go down? See this peak back over here?
Right.
I draw things I call attractors on peaks like that. And you see, let's actually draw it. So we've got a gap that happened right there that hasn't been filled. I think it's going to come down and try to fill that. So we're going to come down to about 49, 46, something like that. So we're going to go down and scare everybody out and then go flying back up.
Yeah. It could be in connection with the stock market having a correction. I mean, maybe in the next week to 10 days, they're going to air out these things, and then there'll come that end of year rally, and something might happen. This
I don't
real
know
estate,
if it's going to happen before the year ends, though. I think the move down will take us into the end of the year.
Yeah. This real estate market is no joke. I was watching the home building companies, KB Homes, KBH, Pulte Homes, PHM, and DR Horton, DHI, and they were trying to get moving to the upside. And boy, did they reverse quite a bit when this Hovey and Homes came out and announced some very bad numbers. Yeah. And so, that real estate market is, it is teetering a bit. Norm, in your Florida area, there's some stuff going on there that would make people concerned with real estate, isn't there?
Yeah, there are. I was talking to somebody who, my house has doubled in. It's taken 20 years to double. Which I thought was a little bit slow compared to some of the lesser valued properties that had triple movements. Not that I'm
Right.
living in Trump Tower, but I figure if you're, the but that's true of many of the markets. But I think that a lot of it could be temporary. I'm reading articles about how everybody from New York is coming down to Florida, and so on, escaping the new mayor.
But they are discounting prices. I mean, I'm reading articles about Austin and Florida and Arizona about discounting.
Right, in the middle class neighborhoods, absolutely true. But we're not talking big
not
percentages.
discounting very much in California.
They're not doing it in California at all, huh?
Not, well, a little tiny bit, but not very much.
Yeah.
We just don't have the supply to take care of the people who need housing.
That's probably the key. But it definitely, like I said, like Norm was saying, these prices had gone up quite a bit in the last 5 or 10 years. And so if they pulled back 20%, that would be a heck of a hit. Some of them have pulled back a little bit, like in the Austin that had big run-ups, they're talking about 15% or so. But because that would make the interest rates drop dramatically if the real estate fell apart in a dramatic fashion, because clearly, they would do everything they can to try to stem that tide.
Mm-hmm. Seems that everybody that comes to San Diego on vacation just stays.
Yeah.
If you look at the weekly time frame, Sunny, do you mind? Can we see the weekly time frame of DR Horton DHI?
I thought it had a bright future. I think it has a bright future. I think it's just having a pullback.
Yeah,
we're now below the flat DMA, so it looks like it's got more down to go.
Yeah. So again, last week, look at that wick at the top. That topping pattern that we see over there from last week.
The shooting star.
No, not that one. The one on the far right, right before the red candle, right before the red candle. Yeah, that one right there. So again, this is where whatever is happening, something is happening, because we've seen it on Apple, we've seen it on Microsoft, we've seen it on all these big companies. Now we've seen it on these home builders, and there's other sectors that this is beginning to appear. So this is where I always tell people the stock market is not random. Somebody knows something, whether they are waiting for this announcement or not. But the warning signs are there. And it's widespread. And it's affected so many different sectors and industries. And I'm like, what's going on? Is somebody knows what's going to be announced on Wednesday? And that's why they kind of getting ready? Or is it just a precaution? But when I look at this, and I'm looking at Lennar Home, I'm looking at KB Home, and they all showing the same pattern, I'm saying, something is not right. And so again, Sonny said it first today. He said, look, this market doesn't seem like it's trying to go higher. And I always say, if it sounds like a duck, it's walking like a duck, quacking like a duck, it's probably not a chicken.
A duck.
And look at where it's happening, right at the sunny band.
Exactly. So I'm like, I don't know. So that's why I said, if you were to ask me, Wally, what do you think this market is going to do this week? I'll bet my money that the market might not go higher. And if it does, I'll be shocked. But my guess
is it could easily go down to this lower inner band at this level.
It could very easily.
Band, and I'm thinking that's where we're headed.
Yeah, very easily, because even like just today alone, I don't know what the news was that brought the market down today, but that's a big move to the downside. We're talking about that
these
big
companies'
red candle,
revenues these companies' revenues are declining year over year.
Oh, okay.
Declining revenues is never going to get birthday cakes put out for them.
Absolutely, absolutely not. That's not good. That's not good.
If Jake was here, he would tell us exactly when the Christmas rally starts and when it ends and the exact dates. But maybe you guys know it. But this is the kind of setup where you get a it starts here, you get a depression in the market, then it comes up to being a little bit higher by the end of the year, and everybody says that was the Christmas rally. Well, if you got in now or yesterday, you didn't have much of a Christmas rally. So what is? Can somebody define a little bit better than I can? How you measure the Christmas rally and whether you can
very good. I can kind of help in that, because that's something I pay attention to. So typically, the Christmas rally begins somewhere around December 18th to December 22nd is when you're going to start seeing that. So just pay attention to that. Somewhere around December 18th And again, it makes sense that the market, like if we, a lot of people think about, oh yeah, the Christmas rally. But in order for us to have a rally, chances are we need to have a drop, right? In order for the sun to rise, there has to be a sunset, so to speak. And so I always tell people the beginning of December is not usually the most rosiest time in the market.
Mm-hmm.
It's usually the second, maybe third week, but usually by December 18th, if the market hasn't bottomed by then, or if it doesn't start rallying higher by December 18th, forget the Christmas rally. But
Yeah.
almost always you'll start seeing December 18th, especially 18th to the 22nd, somewhere within that time frame, you'll be surprised. And then it rallies so big that it's almost like, a woman who, gave birth to a child, the labor pains, they forget about it the day they give birth to that baby, right? So all that labor pain we experience from December 1st up until December 18th, by the end of the year, because of how great the rally is, almost everybody forgets that. But we are going through that labor pain right now, and it's not uncommon that could happen between now and December 18th.
Yeah, we started the month at 6,800. So a 5% jump takes you about 7,150. So if we're going up to 7,150 and it goes down to 67.75 first, people are going to be pretty darn happy come New Year's.
Absolutely.
I don't know. I'm thinking push. I've never heard the labor.
A lot you guys know about labor.
Yeah, that's right. I mean, we have no way to talk about that. But we got the Hanukkah depression right before that, so we'll see what happens.
Norman, you trade crude oil, don't you? In the future sometimes?
Yeah, it's also been deciding what to do, what not to do.
Let's throw crude up on your sunny bands and let's decide if oil's going to $50 or $40 or
it's been spending time on the south side of 60.
It has been
lately, but really hasn't. Again, your bands are pretty indicative of the parameters that we've been seeing.
Sideways. It's just doing nothing.
Mm-hmm.
The DMA is flat, the dynamic moving average flat, which just tells me there's congestion, no trend. So we're down here. I think we're going to go back up to the DMA, which brings it up to 62.10.
Yeah.
And then it'll come back down again.
How about XLE?
XL what?
XLE. It's the energy shares.
Same story. Just a little bit higher.
A little bit more of an upward bias, though, huh?
Mm-hmm.
A little bit.
Yeah. A little bit. And the DMA is starting to turn up a little bit. We've got a positive slope to it.
Mm-hmm.
Even though it's slight, it is positive.
Maybe it's telling us that the oil won't go to 50 and maybe have a rally in 2026.
Yeah, I don't think it's going to go to 50.
Hey, Sonny, can we see the daily chart on that one, if you don't mind?
Daily?
Yes.
Yeah. Half of this is Chevron and Exxon Mobil, so it's really a two-horse index.
Yeah. So on the daily, it's slowly going up.
Yeah.
Slowly.
Looks pretty good.
So right now we're at, what is this, 45, 44.
Okay.
If you put Chevron, if you put a Chevron up there, you're looking at a big gap at 168. So there could be
that, CHV?
A CVX.
CVX. Come on.
Yeah. People would like to see something that might work.
CVX.
Yeah. You see the gap?
Same sideways story.
Yeah. Yep.
Yeah. It has a different bias, though.
Yeah, it does. Exxon XOM has a different look to it. I don't know why. They seem like they're
Well, these people, they're counting on profitability here. And when you have lower prices,
but that's a better looking chart than Chevron. Wouldn't you say that, Norm?
Yeah, I mean, that's a nice looking chart right there.
Yeah. That's Exxon Mobil.
I mean, really a nice channel. If you drew the upper, you don't have to. But,
yeah, so we have a little bit of a trend going up, but it's still
stagnant.
You got higher highs. You got 5 of them.
Yeah.
But
it's still a trader's chart, not an investor's chart.
Yeah, you'll kind of look. Sometimes you look for something that's playing possum, and this is one of them that might be playing possum. Because everyone's so negative on oil.
DMA today. It was right here.
Yeah,
right on the band.
Yeah, we will see soon enough. Are there any other sectors that you guys are kind of taking a look at? That biotech was going nuts for a while, or what about the energy stuff like OKLO? That's your uranium thing, OKLO. Is that time to take a bite here? Or?
I think it's going to drop below the DMA, and then it would be time. As it comes up above this blue candle, heading for the upper bands, then that would be the time to take it.
I mean, do you look with these sunny bands when you're in the middle like this? We're in the equilibrium in a lot of these. A lot of these charts we're looking at. Do you look for a breakout above above that central band, and then a check of it, and then like the current, the 1, 2, 3 type pattern? Is that what you look for here for a trade?
Just exactly.
Okay.
So as it breaks above that, so we've got congestion right here at the DMA. As it breaks above that, I look for 2 blue candles, one that just peaks above and another one that's going up, and then I'll invest in that.
Yeah, because this was a big thing. The nuclear trade was a very big trade. As you can see, it was up at freaking 200 and it went all the way back here to 90. So obviously it was either a fraud. It was either a fraud or this is a very good opportunity, right?
Mm-hmm.
The other one was the quantum computing.
I think nuclear energy is a good investment at this point because they're going to have to use it for the data centers.
Absolutely.
I would say this: if OKLO, I'm sorry, if OKLO does well this week, I mean, because that to me looks like a bottoming pattern right there that is showing.
Yeah.
So if it can break that high from 2 candles ago, that big blue candle that you see, right there. If it can break that high anytime this week, I would definitely want to be a buyer in this one.
Yeah, that's
has
what
a lot
I
of
was
room to
just
go
pointing
higher.
out. And like we looked at the rollover in the beginning, we were talking about a rollover in the market. This is a roll up, I guess you'd
roll
say.
up, yeah. Rolling up. Yep. I would agree with that because the daily chart looks good, the weekly chart looks good. It's coming off a major support from back in August of 2025. And so is that 2025 or 2024? Go back a little bit more to your left, you see,
it's 25.
25. Okay, so somewhere around there, it's coming off of that support over there. That's huge. That's
and
really
we've
huge.
got a head and shoulders of sorts right here.
Yeah.
1, 2, 3, 4, 5.
Well, haven't we satisfied that head and shoulders with?
Yeah, we have.
Yeah.
So it should recover from that.
So I would definitely put this one as definitely on a watch list because again, what was it? Thursday had a big move. It's digesting that big move from Friday today. So if it can break anytime this week above Thursday's high, that's that. And when I say break, I mean like a close above Thursday's high. This is going up.
What the other sector, quantum computing, RGTI, Rigetti, RGTI, used to be up at 60 almost, come down here. Is the same story? Same soup, different bowl?
Same exact story. But it hasn't.
I would agree.
It hasn't penetrated the DMA, so we're waiting for that. It's got to go.
Some people like to buy. They say buy the dip on some of these things. Well, that would be the
dip.
Right?
Yeah. Yep. That's a double bottom, triple bottom. That's a bottom. I don't know how to explain, but that's
everything against previous support. It's got everything.
Yeah.
Yeah.
And so these are the ones where you got to give it time, though. So I think part of trading is making sure that you have the right duration and stuff like that. So I always tell people within about a month or two, without a question, this stock is going to be higher.
Now I don't buy dips and sell tops. I only buy if the market's going up and sell if the market's going down. I want confirmation.
Yeah.
Very good. Yeah.
It was a lot easier making money when all systems were go than it is on the rebound rally. That's for darn sure.
Absolutely. But I like
what about this? What about this Bitcoin stuff? We've got a couple of them. IREN. Another one that's on sale, or
somebody can't spell iron.
IREN, yeah.
Somebody couldn't spell iron.
Yeah, so there we go. We've got a rollover going on this one too. But it still has to make it up to the DMA. It hasn't done that yet. But I think
this could go sideways for a while.
Yeah.
More like it. Yeah. And what about Riot? RIOT? Here's a couple of Bitcoin-y deals.
Nothing to laugh at. See.
Yeah, so see, it came up to the DMA, came up to the purple line, and now it's falling back from it. That's the kind of congestion I often see right before a move out. So it's going to go out of the DMA and on up to the lower inner band.
Well, why don't we throw Bitcoin up there? I know people are probably interested in it, or they used to be. Did we bottom at 81,000? Are we going back up, or are there so many walls of voodoo ahead of us here?
83, yeah.
You got a Wally
just
tail.
About 81,000.
Think so.
Say that again.
I think you got a Wally tail there where your arrow is.
Yeah.
The Wally tail. No, that is true. That is
a tail. Wow. So that would be a climactic type of formation, wouldn't it?
Mm-hmm.
Yeah.
Well, but happening at the low back there in April. I mean, again, it's got a lot of. But this is the kind of thing that can roll around. You got to be careful here.
Yeah.
But they usually, I heard a report and I looked quickly. It seemed to be that Bitcoin tends to respond 45 to 50% before it takes its next leg. So at 120, you're looking at more like 60 or 65 or 70. So there may be some downside here, but Bitcoin is something that you really want to hold on for the long term.
Yeah.
Well, you want to buy at the right
in a non-leveraged
price and
position.
Hold on for the long term.
Yeah.
You don't want to buy at the top and hold for the long term.
Well, but is this the right time, Sonny? That's the question.
I think so.
There you go.
Yeah,
I agree. I concur.
All right, we're coming to the top of the hour here. Norman, you have a lot of stuff going on down at the company there, so let's give you a few moments here to explain how people could take advantage of some of the stuff that you're doing, especially that trading room. Yeah,
you got the trading room, and I don't know if people can see a chat here, but at thedisciplinetrader.com/room, thedisciplinetrader.com/room, you get a free.
You want to take over the screen and put your video on there. There you go. And
my video.
Well, you know what I mean, not video. Your Chiron, whatever they call it in this day and age.
Hang on one second. Let me just reduce
your slide. That would work. Yeah,
there you
slide.
go.
Let me just put it right here. Don't want you to see that. The discipline. We're almost there.
Dolphins beat the Jets this weekend, Norm. Good weekend, huh?
That's a good thing, yeah.
Is that basketball?
Football.
Football.
Yeah.
Okay, let's share the screen and let's put it here. Okay, I think you can see it here. Yeah, you can see that we've got a myriad of testimonials. Don't go by this URL up here. Just use the disciplinetrader.com/room. And you can see we've got a lot of great testimonials for the room, but this is a way to develop a positive habit. It's $99 a month after the week if you care to stay, and I think if you're in the majority, you'd like to stay. There are always people that just take anything free and then say goodbye, and that's okay too. But I think you'll enjoy that. I also have my book is soft launch right now. If you go to Amazon and just look up my name, Norman Hallett, you'll see Their Money, Your Profit. The cashing in on the prop trading revolution. It's already got a bunch of 5-star reviews. It's a very short book. It's only about 75 pages long, but I've really reduced it into what's important about prop trading. So if you're interested in prop trading, you may want to pick up my book. It's semi-free. It's only, I think, $12.99, and the digital version is $5. So take a look if you're interested in prop trading. It is the new kind of revolution for traders. But the interesting thing about prop trading, I'm noticing that it's not the traders with the small accounts that are gravitating to it so much as those with bigger accounts saying, why should I risk my own money? I'm a pretty good trader when I can trade their money and put my money in something a little bit more long term. So it's good for a lot of people. So take a look and see what you think.
Yeah. And, there's guys out there with fixed income and they got cash, and they're getting income there and they want to try to get into the market without upsetting that fixed income thing. One other thing is, do you take them from soup to nuts? Meaning, do you start them out like, I don't know anything about prop trading, and then here's how it works, and here's how much it costs every month, and here's how we're going to have. I mean, do you also, once they're involved in prop trading, have a relationship too?
Yeah, I mean, I talk about the importance of the mental game. Of course, everything I talk about talks about that, and the fact that traders tend to look at what they're making instead of staying away from the red line where the tension is. So I teach people to, in the book, some techniques about using limits, using some other techniques in order to be focusing on the right thing. But as you can see, it's already getting, well, it's already 25 in the futures trading, but it's got some really good reviews so far. So you can read it and take a look, but there's really very little risk at $5 to take a look at this. I think I'm one of the first that really have zoomed in on the whole prop trading market. But this really it's a beginner, but it's a refresher too, because I think that people who are struggling with any kind of trading generally need to look in the mirror and try to match their personalities with their trading plan and understand that you need that match. If you have a trading plan that requires you to be patient and you're an impatient person, that trading plan is not going to work for you. So you need to either adjust the plan or adjust who you are in order to fit that kind of a plan. So it approaches a number of things, but mostly specifically how to manage accounts, and in three phases. You've got the qualification, then you got the funded phase, but people forget the long-term income phase, which you really should be pointing to, so that you can really benefit by what they're giving you here with prop trading.
Perfect. Okay, no, Wally, please, would you explain how people can get a hold of you? I know you have a seminar coming up. You might as well explain how they can go to that.
Yeah. So let me see if I can. We are actually going to be showcasing our platform that we just redeveloped. And so I would love for people to come check it out. You can come join us tonight. We'll be doing this at 8 o'clock tonight. And this is a sample of the platform itself. One of the cool aspects of it is, you'll see over here on the right-hand side where it says today's directive, kind of gives you, this is an end of day data. So this is not for day trading, but more so for swing trading and long-term trading. I just put up the stock of OKLO that we just talked about. It lets you know what the sentiment is, lets you know what you should be doing as far as today. So today's just like to make sure you have a stop on your on the stock if you own it. Exit short positions, meaning that you shouldn't be going short. Last candle, which was on Friday, was when they told you that it's time to start buying. And so this is something that you can get into and just kind of monitor whatever stock you are interested in. And every single day, whether it's a daily time frame, weekly time frame, monthly time frame, it'll tell you exactly what you need to do. It's factoring over about 30 different indicators all put together and let you know what's going on, as well as candlesticks, because most people know I'm a big candlestick kind of guy. So it lets you all know that, and then it tells you when things are going up, when things are not going up, when you should be taking action, when you shouldn't be taking action, should you be shorting, should you not be shorting, should you get insurance, should you not get insurance, all that kind of stuff. So we'll be showcasing that tonight, 8 p.m. Only thing was I didn't have a link just yet. So if you just email me at info@rightside trading and say you just want to come in, then we'll definitely send you the link because I don't have it with me right now. Okay, but
Sure.
That's pretty much it.
That's not a problem. Yeah, they could email you, no problem. Sonny, you have that trading room every day, and I know it's a very insightful one. So could you explain how people could jump into that one?
Sure, I just put it in the chat, moneymentor.com/guest pass, and I'll give you free entry to the live trading room. I do trade for an hour in the morning every day, and you can watch me trade and see whether I win or lose. Sometimes I do both. So 7:30 a.m. California time, 10:30 Eastern. Trade along with Sunny is what it's called. I also have a Substack that I've been doing every evening. I post a little Substack called Where's the Dow Going From Here? Technical analysis for tomorrow. So it's let me put that in there. You won't see it. So TCRG Sunny.
Do you want to switch to your screen?
I think
I'm
it's
just
up here.
putting it in the chat. I don't have my screen up.
No, I have Sunny's stuff on the screen now. Do you guys have that or no?
So tcrgsunny.substack.com is where I post my Substack, and it's free. So just join in, become a free subscriber, and tell me where we're going. I'll tell you where I think it's going tomorrow. And my website is moneymentor.com. So just say no thanks.
I just thought of a new moniker for you. It's join us and trade on the sunny side of the street. What do you think about that? I'm not even that's a freebie for you, Sonny. I'm not even charging you for that idea.
Yeah, I had a newsletter for 13 years called The Sunny Side of the Street.
Oh, did you? Yeah. Oh, you beat me to the punch. I'm not as original as I thought, am I?
I had one called Eclipse, but
yeah,
didn't do very well.
Yeah, it's hard to write a 15-page newsletter every Sunday night.
No, it is.
Yeah.
Okay, guys, as far as Option Professor is concerned, we do have a webinar tomorrow, and it is called Lunch and Learn, and we go over a bunch of option ideas that could be very helpful to you, as well as you ask questions as well. So just email me at optionprofessor@gmail.com, and we will be more than happy to get you the link, and you can check out options tomorrow at lunchtime. Thank you, Sunny, Norm, and Wally. Always good to talk to you guys. We'll do it again, of course. And
All right.
yeah, let's see how things go. And thanks for being here, you guys. And I'll send it back to David.
Thanks for the opportunity.
Thank you, guys.
Thank you, Jim.
All right. Yeah, great discussion. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube, Substack, or your favorite podcast app. Also, mark your calendar. We're doing our last AYT event of the year in 10 days. So December 18th. So that's always fun. If you have not attended an AYT event, it's half-hour sessions. I have a bunch of great educators like our panel today on the event, and it's no presentation, no set agenda. We just look at the symbols that you want to access. You put them in the chat, and each educator looks at whatever you want them to. So
again, when's the next one?
The 18th of December.
Okay, thank you.
So
right when the Christmas rally starts. So
that ought to be good.
Yeah, that'll be
that's a great Christmas present.
Perfect. Yeah. So I don't have the schedule all worked out for that one yet, but we'll get that taken care of in the next few days. So yeah, mark your calendar, December 18th. That'll be fun. And just want to thank my guests again for today. Norman Hallett of theirmoneyyourprofit.com and thedisciplinedtrader.com. And Wally Olopade of rightsidetrading.com, and Sonny Harris of moneymentor.com, and Jim, Option Professor of optionprofessor.com. Thanks, everyone.
Thank you, David.
Oh, also for today's archive on TimingResearch.com, this post will become the archive as soon as I can get everything processed, and the full 11+ year history of Timing Research is always available to review at any time. So, all right, that's it for today. Thanks, everyone.
All right, guys. Thank you. Take care. All right. Bye-bye.